But this call is pretty significant in that it has to do very much with supply. And it's the supply not only in the oil market, but also in the copper market. That's what Goldman's talking about, saying that commodity investors will see a total return of about 4.5% over the next 12 months. Part of that issue is actually speculators. They see a huge amount of ETF inflows coming into products.
And then look at that drop for that one-year chart, yeah.
Yeah, and so more pain to continue from there, because as you see a lot of speculators come into the market, of course, if it reverses course, you see that flood really come out. And in the oil ETF alone, Energy Aspect says we've seen inflows of about $5 billion.
We got a report from the IEA, and that saw a lot of movement in the market today. What did that report tell us? That
we are reaching that storage capacity. So it's truly fascinating that we continue to see storage space be shrunk, whereas we see inventories continue to rise and production rising as well, despite rig count going down. It's kind of a strange, crazy world that we're living in the world community. So take a look at this chart, Mark. That orange line is where storage is right now. All the other lines are the 5-year low, the 5-year high, and the 5-year average. We're significantly above that now. And the IEA is saying that once storage capacity is full enough, that's when we're going to see those production cuts, because prices will come down that much that producers will have to shut in production.
And just quickly, tell us about some of the other commodities that Goldman mentioned.
Well, the big one was actually copper. Basically, part of what's been helping copper has been China has been stockpiling it, and there's speculation they won't be doing that this year. Plus, we're looking at a potential kind of mini boom in the copper market, in that Freeport's going to be starting up 2 new projects. You know, that's part of the deal. It's all about supply, less about demand.